Hello traders, Gary Wagner here, just after 1 o'clock in Honolulu, 6 o'clock in New York. It is Thursday, 5th day of December, 2019, and this is the Daily Report for Gold and Silver. Fractional gains across the board in the precious metals, with the exception of platinum, and fractional gains in U.S. equities is really the tune for the day as traders await tomorrow's jobs report. Right now, we are looking at the fact that ADP came in well under expectation yesterday, their jobs report, and they estimated 150,000 jobs would be added. The actual number came in at around 60,000. That being said, tomorrow's expectations are 150,000, and if they come in the same way that ADP's came in, well under expectations, I would expect pressure in U.S. equities and the precious metals to rise. Let's take a look at our current pricing. Although the screen is currently showing that gold is down $1.90, when compared to yesterday's close of $14.80, it is actually up $1.20 on the day at $14.8120. The only precious metal to actually close lower on the day was platinum. Platinum now below $900 at $899.70. We had fractional gains in palladium as well as in silver, although in silver they were a little bit more pronounced, up about 0.6%, now showing 1702.5 cents on the day. We had quiet across the board with U.S. equities really doing very, very little, up 0.1%. Dow is at 27,677.79. Let's take a look at our current technical studies. We continue to be long February gold at approximately 1482.30. Currently, when we look at our technical indicators, the first thing that we must note is the fact that we did get a cross of our moving averages, the 50 and 100-day moving average, where the 50-day went under the 200-day moving average. You can see that right here. And also, that continues to be a level of resistance that at this point, gold has not been able to take out. However, my belief is that this market is highly fueled on fundamental events, and with tomorrow's jobs report coming out, if it comes in under expectation as the ADP report came out the other day, then we could expect to see equities go under pressure and gold, silver, and the precious metals complex move higher on the day. That being said, we have to acknowledge the fact that this year has been extremely different from what we've seen in the past. Our basic Fibonacci retracement that we're looking at starts at 1269 and concludes at 1566. What is important about that number is the fact that it finally broke above that ceiling at 1370 that has been so prevalent in the market for a period of, about 3 years. And when we look at that particular price point that comes in roughly at this area, we can see that when it did break earlier in the year in June, it certainly broke hard to the upside and continued to a record high this year. In fact, a record high ever since the market bottomed at the end of 2015 at $1,040 per ounce. That being said, our resistance levels are still intact. 85 and 91 are the numbers that I am looking at, and that is the 100-day and the 50-day moving averages. The other thing is that I think that real resistance is still sitting right around 1,500, and that is based upon the 0.23% retracement level, 23.6 retracement level, and above that, I still believe we've got resistance at 1520, and then again at these tops, which come in just above 1540. And they remain my upside targets for the current trade that we're in. So my recommendation, of course, is to maintain your current long position and to maintain your current stop. I also wanted to take a look at silver. We haven't done that in a couple of weeks at least. And what I'm looking at in terms of various levels of support and resistance are as follows. We certainly also have resistance between the 50 and 100-day moving average, and you can see that there is a cross here. 1750 is where I would put that. Above that, I see major resistance really at about 1775, roughly in that area, and that is based upon a series of tops that occur right in here that also correspond to the 50% retracement. That being said, we could see this market move higher tomorrow if the Labor Department's jobs reports come in well under expectation. However, the industrial component of silver would have a negative bias if that occurred because it is so tightly tied as an industrial precious metal. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on the day of the jobs report. Have a great day. Bye-bye.